Hey there, Lucas Bolahood with you today from Coldwell Banker RMR Real Estate and the Bolahood Group. Welcome to this week's episode of Finance Fridays. My lovely co-host Alexandra Jobb with Legacy Lending is with us today. Alex, how are things in your world?
Hey Luke, good. Got some news to share today, which is
Well,
exciting.
well, let's jump right into it then. I mean, we're first week in November here. Halloween was what's lots of fun. I saw some photos. You guys were Star Wars themed this year. That was
Yes,
pretty good.
yes.
Did a good
Nice.
job there.
Thank you.
Kids looked awesome.
Thank you. Thank you.
But yeah, we did the Super Mario and Luigi, so we had some fun.
I
And my
saw
son
your pics.
was Scooby Doo, so I had some good fun there, trick or treating and everything. Made it to the
Awesome.
most houses we've ever done before because my oldest usually gets freaked out by some scary costume of sorts, and he wants to
And
run.
no fear this year.
No fear this year,
Just
that's for
fun.
sure. He was well prepared, so we had lots of fun with that
Awesome.
stuff. But it's been
Good.
a very busy last couple of weeks here. So obviously, you're saying there's some news with on the financing world. So let's have it.
Yeah, I certainly love good news stories at this stage of the game with everything that's gone on this year. So wanted to share this new item. So what it is like when our clients are switching lenders, it's now possible to qualify an insured mortgage at the contract rate. So you're probably thinking like, who does this impact and what does this mean? And really, it's for those clients that purchased a home with less than 20% down
Mhm.
and they had a default insurance premium on their mortgage. So this essentially helps the clients qualify when they're shopping at the time of renewal. So you know that normally we're qualifying our clients at their contract rate, so whatever the going rate is at the time, plus 2%. We're
Mhm.
talking these scenarios for the insured mortgage borrowers. They're coming to switch and look for a different lender. We're going to use the contract rate, which is awesome. Okay, so I have a little scenario that I can share just to make it like kind of real.
Well, and today, like before we jump into that, Alex, like the
Yeah,
contract, or sorry, to qualify today, the contract rate is what, like 7%?
it
Prime
could
is
be.
7.2.
Could be. Now, this I'm going to give a better scenario for an insured mortgage. Okay,
Okay.
so just based for the math, we're going to use 5.5 because we are seeing rates in that low 6 to 5, in the mid to high fives. If
Mhm.
you're willing to take it, jump into a 5-year contract rate today. So the
Interesting.
shorter terms are higher, but our rates are not so bad for the longer term stuff. So a lot of people are going that way, and then they'll consider breaking their mortgage, midterm or at the end of their term, get into something new. So for this scenario, we looked at an insured borrower. So this client has bought their home with less than 20% down whenever. It could be 6 years ago. It didn't necessarily have to be within the last 5 years. So I've got an insured mortgage of 300,000. We assume that the client has like $1,000 a month in non-mortgage payments. So that could be their car payments, some credit card, maybe a line of credit. Using in this example, 5.49 and a 20-year amortization, that borrower would need $103,000 of income to qualify with the contract rate plus 2% considered. Okay, 103,000. Now, if we just use the contract rate and not the 2% additional rate surplus,
5.49.
right? Then the client would only need $93,000 of income. So that's 10% less income required to get the better rate. So that means that fewer borrowers are going to be trapped with their existing lender at renewal. So my advice is if you're coming up for renewal, keep in mind that other lenders may have a lower rate or a mortgage product or terms that better suit your needs. And it would be a great time to review it. So you know that at maturity, you don't have a penalty to break your mortgage. And that's what I'm here for. Shop it around and see what your options are.
So this isn't just a benefit to the first time buyer.
Not
You're saying
necessarily.
this is a benefit to an existing mortgage owner or holder or an
Exactly.
existing owner
If they had an insured mortgage product, because we
previously.
essentially transfer that insured mortgage product. It's still staying insured. We get the reference number and it's still an insured product. So this is not for refinances. This is for straight transfers. If you're looking to refinance, all other scenarios for applications would that 2% addition would apply when we're qualifying our clients.
So as you were alluding to, so 6 years ago, I bought a home putting less than
Yep,
10% down. I'm still on that
less than
insured
20%.
mortgage. Pardon me?
Less than 20%.
Yeah,
So it
less
could
than
have been you had a
20% down.
15% down payment. Yeah.
Now, if it was 6 years ago and I've already refinanced once with that rate or with that
Your existing
existing
lender.
mortgage,
Yeah, it should
I
still be an
can.
issue.
Sorry. So after if I'm an existing homeowner and I've got a mortgage already on the home, after having 10% down, I can buy a new home with that same program and qualify at the current contract rate, not contract plus 2.
And this isn't for a purchase transaction. It would be for at the time of renewal or breaking your mortgage contract and coming to a new lender.
Okay, got you. So that's where I was trying the missing piece there. I was trying to think, okay, so I
You're
can't
thinking,
use
what
this if
about
I'm
purchase?
buying a home and I'm
Yeah.
upsizing my existing
Purchase
home.
is
This is
different.
just for the moving
Transfers.
rate over. Yeah.
Yes,
Oh,
exactly.
that's positive.
Good clarity.
Absolutely, though.
But it
Right?
is. And like, the other things we're reading some reports of, okay, a good sign that Bank of Canada won't be changing rates on us come December. So that's a highlight. And then we may see some rate relief like mid to end 2024. Some people are saying 2025, but let's hope mid to end. Anyways, if you're coming up for renewal between now and then or at any time, just connect and we can diarize what the best time to shop your mortgage is.
That sounds like a great opportunity. And yeah, I'm reading different headlines around projections on inflation and 2020 mid 2024, the Bank of Canada is hoping it's going to be around 3.25%. And I'm also reading and talking to different people. You see these content online as well, where I think was it 2/3 of homeowners in Canada are going to be coming up for renewal in the next couple of
So
years. And the
many.
Bank of Canada is
Yes.
really concerned about that.
Yeah.
I certainly see why they would be. But for an existing homeowner, like if you've been in your home for more than 5 years and you likely have, lots of equity in the property, you're still in a really good spot to move up or downsize your home if that's what you're looking to accomplish right now. Like because prices are coming down, and we'll go over the stats for October in a moment. But as prices are coming down and there's much more inventory on the market, you've got numerous options to choose from to try and find the right home, not be forced into one that you maybe didn't like quite as much as we were sort of dealing with in the last few years when inventory was so scarce. You've got many more options to pursue. So that's a really positive for buyers if you're in the market and can make the payments work for yourself.
Yes.
Because again, you've heard this adage before, we talked about it, you marry the home, but you date the rate. And really, as long as you can make the numbers work in the near term, while rates are higher, you can always, as you suggested, you could break your mortgage to get a better rate when they come down, and or you can simply refinance as the schedule allows you to for your mortgage. So that's a positive, I think, for buyers. If you're in the market, there's going to be a lot of opportunity in the next number of months
And
to find a home.
if rates are coming down, that means a couple of different things, or sorry, not rates, but the prices are coming down a little bit. You've got that pool of people that have wanted to get into the market. And for the people that are okay with increasing their mortgage a little bit, but they're not overpaying, right? Like it seems just a little bit more realistic to be in that buyer's market and pool and be able to like think, shop, look at the house, like really digest the numbers instead of being on the
Actually have a
fly.
condition for your financing in the offer, right? Like that was a scary thing we talked about over the last couple of years. Even though rates were so cheap, people weren't going in firm because they knew they could afford the house. But now you have the opportunity to have those proper conditions in place, conditions on the sale of the purchaser's property as well being another.
And it
so you
doesn't
can
mean
ensure
that
you get that equity.
it doesn't mean that the sellers are losing money. Like the sellers are still in a fair place, and I'm sure they've got lots of equity, but it's just a different tempo, right?
Much different. The tempo, that's a very good word, because the pace, the speed of the market has slowed down. The tempo has really pulled back to more of a walk rather than a full sprint we were doing recently, right? And like looking at the numbers here, even though sales were down in October, average price did tick up. So, buyers who are moving up in the market, taking advantage of these lower prices because they have lots of equity in their home, they can do that without having to take on a larger mortgage. So they're willing to pay a little bit more for the home because they've got all that equity in place. So like the average price went up, I believe it was 2.7% from 907,000 to 931. That eclipses where we were at in August at 930 from 2 months ago. But our sales dropped about 10%. We went from 653 in September down to 588 in October. New listing inventory picked up a little bit, and so did our active listings on the market as we closed out October, which landed us actually at 3 months of inventory pretty much right on the dot. So we're certainly, and that's up from 2.5 months in September. So, we're trending up. Inventory is going to rise, which means prices are going to come down, and people should keep an eye on, if there's a certain area you want to be in, we should be keeping a close eye on what's on the market, on those certain streets, because there's going to be opportunities that come up here. And as of today, as I'm looking, there are over 2,000 listings actively on the market. It includes, the freehold properties and the condo style homes. 2,000 active listings on the market, and based on those sales numbers in October, we're at 3.4 months of inventory right now. So we're trending towards that balanced market that I've been talking about so much here in the last couple of months. So, excuse me. So it's going to slow down, but there's opportunities out there for buyers if you can make those numbers work. And again, talking about insured products and moving those things along, that's a good thing for a buyer as well. It's good to see that the Bank of Canada or the CMHC has made some of those changes, I guess, right? That's where that came from, as you were alluding to.
Yeah, our regulators.
Gotcha. Well, what are you expecting here for November? You think things are going to start picking up? As it feels like my hair's been on fire the last couple of weeks, but how are things for you? What do you think November is?
I've been busy with a lot of new applications and just like, pulling things apart and really digesting like numbers for clients to see what their best options are. So a little less on the buyer front, but some refi scenarios and switch applications. So it's busy on my house and my desk every day.
And you've got a little event coming up this week with Legacy Lending
Little
Teams
launch
party,
we'll
right?
be
That's
airing.
Wednesday.
Yeah, so we'll be airing on this, I guess, on Friday. So it would then be in our past. But tomorrow we're having a little launch with our friends and family and some realtors, and really looking forward to celebrating our new space. So
that's awesome. Well, we'll leave it
I
there.
will see you there.
Congratulations again. We'll look forward to hearing about how it went, and I imagine it'll be fantastic. But nonetheless, we'll look forward to seeing what happens here through November, and we'll be back here in a couple of weeks.
Okay, Luke. Thanks so much for having me.
Yeah, thanks so much for joining, and everyone, you'll find our contact information at the end of this video if you have any questions for Alex or myself. And until next time, have a great day. Bye for now.